The big three corporate health funds have no reason to raise their prices more than 3% next year. That's according to a new analysis done by APRA. Insurers have been blaming increased medical device costs for raising prices, but the Medical Technology Association of Australia says this isn't true, arguing the overall cost of medical devices to private health insurers has actually gone backwards. Joining me now to discuss, Ian Burgess, the CEO at Medical Technology Association of Australia. Ian, good morning to you. Thanks very much for joining us.
Good morning.
So, what is the problem? I mean, we've spoken to a lot of people actually on this show, especially at the Grattan Institute recently, and they claim that it is a death spiral. It's spiralling downwards when it comes to private health insurance premiums at the moment. Is that what you think?
Well, people are certainly increasingly questioning the value of their private health insurance. And when we have increases from the big three that are double the rate of inflation, and at the same time they've banked $1 billion in profits, then it's not a good look. So we need to make sure that those increases this year are less than 3% and that insurers are held to account. So the official government data does show that medical devices have reduced in cost and they've come down significantly.
Well, that's what the insurers say, though, isn't it? Hip replacements or knee replacements, the costs are too high, so that's why the premiums are going up.
So device costs have come down by 20% and more, and there's another round of increases coming in next year.
So they're lying, are they?
So it's a campaign of misrepresentation, and it's purely for the purposes of trying to get another round of premium increases that are double the rate of inflation, maintaining profits, and they should be passing on those device costs, price reductions to their customers.
So are they just not being policed well?
Well, APRA has fired a warning shot to the industry. They wrote to the industry and said they need to get their house in order. They have to stop relying on others, and they have to stop lobbying government to solve their problems. Now, unfortunately, they're still doing that. We're seeing that in the media as we approach the next premium increase, that insurers are just putting pressure on government so that they can get another double the rate of inflation increase.
Ian, people aren't daft, we know that. You know, wages, everything is squeezed at the moment. People are trying to get by on a lot less, and so that's why they're giving away their premium, their private health, aren't they? And that's what's jacking up the prices. So how is that going to stop?
So it needs to be kept to a less than 3% increase. And the APRA data shows that insurers the big three don't need to be increasing more than that. So if we can keep that down to less than 3%, and we're also, through medical devices, getting access to more technology, insurers are paying less, and customers, patients, are actually accessing more medical devices for less cost.
Should people be doing what we're being told to do with banks at the moment? Should you be shopping around trying to find a better deal and avoiding the big three?
Absolutely. Should be shopping around, and the government has introduced reforms to make that easier for consumers to make comparisons between insurance products. Now, it's still very confusing in terms of what's out there in the market, but you need to shop around and make sure you're getting the best value.
Because I think, I guess there is some trepidation in giving up your private health that a lot of people have out there, because they think, well, the minute I give it up, it's the minute something happens to me and I need it.
It is, and insurance does play an important role in our private health system. And what insurers should be doing is focusing on the value that they provide, focusing on the value of their product, and including in that is the value of access to medical technology at less cost.
All right, Ian Burgess, appreciate your time this morning. Thanks for coming in.
Thank you, good to join you.